All right, we have 2 p.m. Central, 3 p.m. Eastern. Thank you all so much for being here today. I'm Tony Bramley. I'm the Director of Business Development with the Mortgage Collaborative, and we're glad that you have stopped by today. We have got a great session for you. Our partners, CondoTek, Urs Tomaselli, who is the President of Project Review for CondoTek, is going to be talking to us about Fannie Mae's unavailable list. So that was like undeliverable. No, that's not right. Unavailable list.
Unavailable.
Right. Before we get started, I wanted to say that you have all entered in on mute, but we do want this conversation to be interactive. So please drop your comments or your questions in the chat, and Urs will take those at the end of his presentation, and we will get started. So excellent. Urs, thank you so much for your time today. Appreciate it. There will also be a follow-up email that comes out tomorrow. This is being recorded, and it will contain, will you be giving the deck for the folks?
Okay. We will. Yes, absolutely.
Great. So we'll include the deck as well as a link to the recording. And without further ado, Urs, I'll hand it over to you.
Thank you so much. I really appreciate the opportunity to provide, some guidance here today with Fannie Mae's unavailable list. There are so many questions that come into CondoTek, and we're so happy being a partner with the Mortgage Collaborative. It's been a great experience for us, and we've met a bunch of people that we've kind of fallen in love with, and it's just been a fantastic experience to see so many really smart people out there in the industry that are part of this organization. So thank you for having me today. So this Fannie Mae unavailable list there are an enormous amount of questions that come up about it. There is an article that came out a couple days ago in a publication called The Brick Underground that I was interviewed for. And it was really interesting because there is a lot of, just a lot of people just don't know that this list even exists and what the implications of this list are to residential mortgage financing in condominium and cooperative development across the country. So we're going to try and give you some insight into it today from a couple of different perspectives. What it feels like, or what you need to know as a lender, what you need to know as a unit owner or a board member or property manager. Those are, it's an interesting disconnect right now in the industry because this list, as I'll outline to you in a minute, is technically unavailable to the public. So let's jump into this, and I'll give you hopefully a pretty good outline of what it is. So supposedly, Fannie Mae has had an unavailable list for a very long time, but there have been hundreds of condominium and cooperative properties that have been added to this list since the release of the new temporary guidelines that Fannie Mae released in 2022. Mortgage financing for borrowers is unavailable for any listed property that's on this list. And the condo and co-op properties that have been added to the list, there's a bunch of reasons as to why they're on this unavailable for lending list. You essentially can't deliver a loan to Fannie Mae if the condominium property is listed on this list. It's really a difficult list to get your hands on if you're not a Fannie Mae seller servicer or have some sort of view-only capability. We'll go into that in a minute or two for correspondent lenders. And so owners of condominium units, property managers, board members, attorneys who represent purchasers in condominium, whether it's existing established condominium or new development condominiums that are on this list, have no idea that these properties are on the list. It's not public, it's not made public. And from what we understand, there are no plans to make it public. Removal from this list, if you're listed as a condominium property and your condominium property or cooperative property is on this list, the removal to get yourself off of this list, even though Fannie Mae's guidelines state that, it's an easier process. Our experience has been that it's a difficult process, and I'll explore the reasons why it's so difficult in a minute or two. But the best way to get off this list is through submitting an application to for a PERS approval, project eligibility review service through Fannie Mae, and get a global approval or a building-wide approval for the specific property. So this is really starting to cause a wrinkle in the industry, and there are so many properties being added to this list, and we anticipate many, many more properties being added to this list. I've heard numbers, upwards of 10,000 properties are going to be added to this list this year across the country. And that doesn't seem so far out of, it doesn't seem an impossible number. I think that there is probably a likelihood that hundreds or thousands more properties are going to be added to this list. And I'll delve into why that is and why I think that is. So first of all, let's go through access, right? This list is technically only available for Fannie Mae seller servicers. You can, as a correspondent lender, request view-only access to the list, and Fannie Mae would have to give you access to CPM in order to view this list. There used to be also a public list of any Fannie Mae PERS project approvals that was available. I want to say probably 6 months ago or 9 months ago is when they kind of shut down your ability to view that PERS approved list, which essentially allowed you to see whether anybody had submitted an application for Fannie Mae PERS approval on a condominium development, whether or not that property was approved, and whether or not it was denied. And sometimes I think it even gave you the reasons why it was denied. So that list is unavailable right now to the public, unless you're a seller servicer or have this view only capability. That PERS approved list is also unavailable to you. How does Fannie Mae identify these properties, and how do they get added to the list? And that's one of the big questions that comes up on a regular basis for us. So there's a variety of different ways, and some of this is kind of known throughout the industry, and some of this is kind of a guess because they don't really provide you the reasons of how a property ends up on that list. But we have heard and seen that if a single loan is submitted to Fannie Mae for a project eligibility waiver or a PEW, then if that property is non-compliant and they see a questionnaire and something on the questionnaire triggers non-compliance, that projects like that or properties like that have been added to the list. In post-closing reviews or loan repurchase scenarios, we have seen that properties have been added to the list as well. Sometimes a lender will pick up the phone or go through Fannie Mae's service in order to determine, some sort of eligibility criteria on a specific property. And that has been an instance where we've seen a property be added to the list because something was identified or uncovered, some sort of non-compliance was identified or uncovered, and we've seen the property all of a sudden be added to the list. And there is this process, and something that's kind of happens in the industry, that when one lender is lending in a specific condominium development or cooperative development, and another lender has done their due diligence and knows that that property is non-warrantable or shouldn't be warrantable, we have heard of and seen instances where the second lender will call up and say, hey, we can't lend in this site, and our loan officers are saying, well, why can't we? And we're seeing all these loans being done by other lenders. Did you know that this property is non-compliant? So that's interesting as well, right? It's almost like the tattletale kind of scenario that puts a condominium development or cooperative development on the list. I mean, technically, When you are a seller servicer, this is your responsibility. So it's not, I use the word tattletale, but the reality of it is it's the essentially requirement if you are a Fannie Mae seller servicer to do that. But we've seen a lot of properties be added to the list because of that. And I would guess that there are many other reasons or many other ways in how a property ends up on the unavailable list, but there's a lot of mystery shrouded around this process. So we really don't know the appropriate answers. But these are at least the four main ways that a property ends up on the list. The reasons why a condominium or cooperative development ends up on Fannie Mae's unavailable list, it's not a secret when you see, what the reasons are, when you kind of roll down that list and see, what the declination reasons are, the same sort of reasons come up over and over again. And I would, when I looked at the list, I saw that, the same kind of things, again, over and over again, the same reasons for declination or being put on the list, were really evident. So those are, if a single entity owns more than 20% of the units within the condominium or cooperative property, that's a reason for addition to the list. If investor ownership in the totality of the development is above 50%, we have seen that be a reason why a property is added to the list. Obviously, if the property is designated as a condotel or has hints that it is a condotel, that property will end up on the list. Significant deferred maintenance, typically found out by a questionnaire that's been delivered to Fannie Mae and or some sort of litigation on the property. That is a reason where we've seen over and over properties being added to the list. A lack of a 10% reserve budget line item in the operating budget, right? Fannie Mae has really dug its heels in on this one point where Freddie Mac still allows you to utilize a reserve study, to outline an accurate reserve amount. But Fannie Mae has said very clearly and unequivocally that if a property does not have a 10% line item in their operating budget for reserve, that property and or loans are ineligible. So we have seen many properties being added to the list just because they don't have a 10% line item for reserve. If their capital reserves are inadequate, so let's say they do have a 10% line item for reserve, but they have $100 left in the reserve account after at the end of the year, their amassed reserves in an account is what we're talking about here. If they're inadequate, that we've seen Fannie Mae add those types of properties to the list. If there's any type of litigation, really, even if it's, we've seen some properties be added to the list with what we would consider, minimal litigation or acceptable litigation, but we've seen a couple where those properties have been added to the list, and those are typically things that within a full review process that you would, essentially get Fannie Mae to look at and ostensibly allow a closing in that development. But even minor litigation, we've seen some instances of, relatively minor litigation, putting a project or property onto this list. And also tied into that is, of course, any structural integrity issue or structural integrity litigation that's on the property. It has thrown these condominium developments and cooperative developments onto the list. I want to be clear here. I don't think that Fannie Mae's guidelines are terrible, meaning that I think that it's probably a good reset for the condominium world to comply with these new guidelines. It's going to take a while to comply with these new guidelines for many properties. And, you have to have these guidelines in place and you have to kind of walk around with a big stick if you're an agency, I would think, in order to make sure that people actually comply. But some of these reasons, you could essentially technically submit these projects or properties back to Fannie Mae with the appropriate documentation to have them removed with the appropriate backup or information that you would need. So that's the most reason, the most common reasons for addition to the list. But I will say that there are lots of other reasons that we've seen projects added to the list, and there are 1,400 plus properties on this list right now. These are the top reasons, but we've seen other infractions leading to condominium developments being added to this unavailable list. Removing a property, as I've outlined earlier, is, we think the easiest way to do it is through the PERS project approval process. The agency does say that you could essentially, a Fannie Mae seller servicer could call them up and, outline that, the issue has been corrected and they will remove a property from the list. We haven't seen that happen yet personally, and I haven't heard about it. Doesn't mean that it hasn't happened. We have seen and have shepherded a couple of condominium associations through the process of removing them from the unavailable list. And in fact, we offer that as a service at CondoTek, where we will take a non-compliant property and look at it and put it back together and make sure that it is compliant. And that includes the legal reviews and ensuring that their insurance is compliant and items like that. But what you have to realize is, and this is kind of interesting here, if they get rejected because there's more than 20% of the units are owned by a single entity, and let's say that single investor sells off a couple of their units and the building drops to 19% as a single entity ownership, which would technically mean that the property is viable for removal from the list. The problem that we've seen coming up is that Fannie Mae also, if you're submitting through the PERS process or even trying to remove a property from the list, it's not only that issue then, right? Then you have to look at the rest of the development and make sure that the rest of the development is compliant. So if you're on there because of litigation and you don't have the appropriate language in your bylaws or operating documents regarding notification provisions, Fannie Mae can still keep the property on that unavailable list because technically you're not entirely compliant, which is really important to know, right? Sometimes it's not just that one issue. So the pro tip there is, you really want to make sure if you're going back to the agency to try to remove a property, you want to make sure that the rest of the property is compliant as well, which takes some work, by the way. The big thing that we're seeing in the industry is that, there's a little bit of rage coming from property management organizations and board members and homeowners, in properties that have been added to the list, because Fannie Mae doesn't inform those homeowners or board members or property managers that a property has been added to the list. And obviously this can cause major issues for a development, and I'll delve into those in a second, but it's a big issue in the industry. The impacts are, and this is what we really need to kind of focus on, if you're on Fannie Mae's unavailable list, not only is mortgage financing unavailable through Fannie Mae, but Freddie Mac may, provide a reciprocal denial. Obviously, you can submit to Freddie Mac or follow their guidelines for approval. But if there's an issue with litigation or structural defect or something, obviously this has now been brought to the attention, and the rest of the agencies are looking at this unavailable list too, when and where they're able. So a listing from Fannie Mae could really have a domino effect for a condominium development, where that would mean that in some instances that Freddie Mac mortgage financing isn't available, that portfolio or non-warrantable secondary market portfolio financing is also not available or not available. We've seen that happen in some cities across the country where, we're kind of sailing along on a new dev property, and the property was then added to Fannie Mae's unavailable list, and non-warrantable lenders and portfolio mortgage financing was being offered in those new dev properties. And all of a sudden it dried up, and those underwriters started looking at, the issues that came up with Fannie Mae, even though they weren't part of their initial underwrite or initial review. So this could spell disaster for a lot of condominium developments. And values are one of the biggest things that could drop, substantially for developments that get added here. What we've also seen is another thing that's come up recently is that, if an association needs to borrow money, whether that's through a CERA loan or for a cooperative development to obtain an underlying mortgage, whether it's to take some capital out and or just to refinance an underlying mortgage for a cooperative, we've seen properties that were added to the list have major issues in getting that type of commercial financing for their properties. So this is a big deal. What we've seen is that to correct some of the issues, and one of the impacts could be major increases in unit owner maintenance as well, whether that's through complying with the 10% reserve line item, or for a myriad of other reasons why maintenance could go up, and whether it's to solve a litigation problem or fix a deferred maintenance issue. This is what we're seeing as being a major issue here in the industry. Just a reminder for everybody on this call, and I did want to leave a little bit of time at the end here to provide you with, trying to answer any questions you may have. But CondoTek is, essentially a condominium cooperative data provider. We also, one of our main products right now is the Condo Project Warrant, where we actually handle the review for Fannie Mae or Freddie Mac or specific investor requirements and underwriting guidelines for condominium and cooperative properties. So we do this across the industry, as most of you on this call know, but I really wanted to have a shameless plug here and tell you a little bit about ourselves. We have the Condo Pack product, the Condo Project Warrant product, the Co-op Pack, where we also provide documents on co-ops, and the Co-op Project Warrant as well. That being said, if you need to contact us on a question on the specific property, or you have a client or a board or a new developer who wants to get go down the road of a Fannie Mae PERS approval, or if you find a development that has been added to the unavailable list and they're looking for some guidance on how to be removed, please contact us. All of our emails, or the important emails of the people who can handle that request for you, are here. And again, we're going to provide this deck to you as well. So that being said, is there anything that any questions that anybody has on this unavailable designation?
Hi, Orsh, we did have a question come in. It says, what is the time frame you're seeing for Fannie Mae to review and remove the project from the unavailable list if you submit for corrections?
So we've seen very few that were submitted directly to Fannie Mae by a seller servicer, or we've been informed of very few that have resulted in a property being removed from the list. We have seen and have been part of submissions to Fannie Mae for PERS project approvals, where it's a global approval on the site. And in those instances, it's been anywhere from 45 to 60 days on average in order to submit and get Fannie Mae to review that project and get an approval. Sometimes we've gotten them quicker, sometimes we've gotten them removed quicker, but you really have to have all your ducks in a row to get your removal. Again, if you go in, if Fannie Mae takes you out, it puts you on the unavailable list for one reason, if you're going to submit for PERS approval, the property has to be pristine. Everything else about that property has to be compliant, and that's not always the case. So we do a lot of work at the initial stages before we submit to Fannie Mae for approval. And if we can't get a Fannie Mae approval or know that it's going to be rejected, we often offer those clients global portfolio approvals on the development through the secondary market investors that we know.
Okay. Had another question come in. If the list is not public, when does it become known to in the lending process that the property is on the unavailable list?
So
is it upon underwriting or earlier?
So it really depends on the lender and when they're checking this list. So most lenders that we work with in the industry check this list before they even place an order for us. And in fact, we require it. Meaning that if you're going to place an order with us for a condo pack or a condo project warrant, you need to do your due diligence and essentially look into seeing if that property is on the unavailable list. That being said, it's often done now right after the loan is originated, prior to the full underwrite on a condo project, because if it's on that list, you're out of luck as far as a quick process for approval and closing.
Excellent. Thanks. And you may have already addressed this as part of the conversation, so I apologize if I missed it. Now that Fannie Mae is requiring the full project reviews to be added to the condo project manager, how is CondoTek assisting lenders with this new requirement?
Yeah, so we have spent a lot of time trying to figure out what the best solutions are for our lender clients. And what we've decided on is essentially walking them through every single question. So when a condo project warrant application is submitted, and let's say you have to submit it through the CPM process, and let's say you have to do a full review on it internally, we're going to provide you not only with the documents, not only with the decision, but also a step-by-step process of entering it into the system and how to answer the appropriate questions in that system. So trying to make the process for our lender clients a lot easier. And I think everybody's going to struggle a little bit if they don't have a lot of experience with this, process of full review. But we're here to help, and we've been doing this for over a decade, and we're very good at it. So any questions that come up, we're going to be able to handle those questions and provide a solution for our lender clients.
Excellent. Thank you. We got some more questions coming in. Thank you guys so much for sending these questions in. This is great. Can a building proactively try to find out with the lending partner?
Yeah, absolutely. And we've been kind of toying with different things in the industry. We have what we like to call our retail division, where we handle a lot of direct to association project approval work or portfolio lending approval work, FHA approval, Fannie Mae approval. And we consult very often in the industry with condominium associations and developers. And what we have been saying to our property manager clients who manage tens of thousands of buildings across the United States is you really need to put this on your agenda. You really need to get a clean bill of health for each and every one of your managed properties. And that's the way we're trying to approach it. So yes, the lender partner, you should be able to not only figure out if you're on the list, but also go through the due diligence process of determining whether or not that property is compliant. We have had lots of clients, lender clients now, who have done just that, sending us project approval request, condo project warrant request without a borrower name. And we'll do that all day long, right? Because that's the best way to find out if that property is compliant or not. So technically, you could go out, collect the fee from the association, have them, and order a condo project warrant from us, and they could have a, essentially a bulletproof designation on whether or not they're compliant or not.
Perfect. Excellent. And then we've got another question. This is a bit of a specific question. It says, if I tried to submit a property on the list through DU, would DU return ineligible and give a reason, or would it approve it anyway?
Yeah, it's a good question. DU is likely to approve it anyway. it has been approving them. I don't know if they've made that software change internally yet, but from what we've heard from a couple of partners, that's supposedly on the horizon, that they are going to make that change where it will return it and say the project is on the unavailable list. As of the last time I checked, which maybe less than a week or two ago, it had not. So meaning that, you could technically get it all clear and a DU approval, and the project may still be on the unavailable list, and you still can't send your loan through. It's a big issue. Yeah.
Right. I could see where that would be a big issue, for sure.
It's important to note for anybody who's still on this call, there are new guidelines coming out from Fannie Mae. We have been advised that they're currently in the FHFA's hands, and that there may be, as early as the end of this month, or, for one drop of a new set of condo and co-op lending guidelines that are going to make things more restrictive. And in somewhere around June or July, seeing a drop of guidelines regarding the reserves that are required to be collected in specific condominium developments. And I think based upon certain triggers, whether a project has, litigation or, a deferred maintenance, that the agency may require up to 25% of the operating budget towards reserves to be on, to be on an operating budget, 25% reserve instead of 10%. So there are a lot of properties that are going to be at risk and will be added to this unavailable list based upon those new guidelines that are supposedly coming soon. So it looks like it's getting a little harder to get condominium projects approved. We're here. We're right at the the front side of the lending experience as far as compliance is concerned. So we're here to help in every single instance. And when those guidelines come out, we'll provide additional webinars based upon those new guidelines as well.
Excellent. It gives us all something to look forward to. Urs, thank you so much for your expertise and for sharing this information. As a reminder, we will have a follow-up email that comes out tomorrow. It will include a link to the webinar recording, as well as the deck that Urs has shared with us. So thank you all so much for being here. We appreciate you stopping by, and come back to TMC Connect Tuesday, Wednesday, Thursday, and enjoy some more great programming. Thank you so much. Appreciate it. Thanks, Urs.
Everyone, thank you.
Bye.
Bye.